Earlier this week, I was scanning FinViz for cash secure put candidates. I found one that looked perfect under $50. Pullback from high, decent volume, optionable. I was about to set up the order when I caught myself and ran through 3 checks I always do before pulling the trigger. 2 of those 3 checks fell badly, and let me show you what's happened, because if I would have taken that trade, it could cost me 25% in a single night. Here are my standard filter for finding cash secure put candidate. I will walk through each filter and explain why I use it. These are all technical filter. They tell me a stock has moved, has volume, and has option. But notice, that's what they don't tell me. So BW caught my eye. Let me show you why. Why BW look attractive at first glance. First, BW went from $8 to $19, now pull back to $14.84. Then if you look at the option chain, which is this one here, so the option chain for BW is for June 12. So we have 35 days. So for $12 put, so the premium is, when you look down here, is about $1.15. So quick math, if I sell one contract, I collect $115. The margin requirement is about $376 as here. That's roughly 30% return on capital in 35 days if the stock stay above $12. Sounds great, right? On the surface, this looks like a textbook for cash secure put setup. So what actually stopped me? So let me run through 3 checks. Check number 1 is the earning date, the first red flag. So let me just pull up the trading view here. So first check I always do is ask yourself, when does this company report earning? So there's a warning sign right there. The earning, when you look at the earnings revenue here, the earning date is Friday, May the 8th. The exact day I was looking at this trade. So I will explain what this means. The implied volatility is elevated, especially because earning is coming. The premium I was excited about, $1.15, most of it is earning risk premium. After earning, you will get the IV crush, meaning even if the stock barely move, you would capture maybe 30 to 40% of the premium overnight. But if earning disappoint, the stock can drop 20 to 40% in one session. So selling a put right before the earning isn't collect premium, it's gambling on an earning outcome. So the check number 2 is fundamental. Let me walk through the revenue, which is part of the fundamental. The revenue is in blue color here. So when you look at the revenue here, it's been trending down over the past 4 years. So what about the net income? The net income you see here is in green color. The net income, that means it's under the line here, which is that means the company is losing money. The net margin, which is the orange line here, the net margin is also negative. So the last 5 quarters of earning, almost all misses or barely hitting the estimate. Tomorrow estimate is negative. If you look at over here, it's around about 0.037 per share. So they expect to lose money again. I sell cash secure put on quality company which I would be willing to own if assigned to me. If BW get put to me at $12, I am now the proud owner of an industrial company that lose money every quarter with shrinking revenue in what looked like a falling knife scenario. That's not getting paid to wait to buy a stock I want. That's getting paid to catch a falling knife with a margin requirement. Check 3, which is IV check, which is the third confirming red flag. So when you look at the IV over here, it's 119.7%. When you see IV over 100%, the market is telling you something is going to happen and we don't know which way. That's almost always either earning, an FDA decision, a lawsuit, or some other binary event. So high IV make premium look really attractive, but it's high for a reason. The market is pricing in extreme uncertainty and you are selling that insurance. So what I'm doing instead, so I'll pass off on the BW, but that doesn't mean I'll go to bed. So here's a framework. So I actually use to find good cash secure put candidate. So basically, first you need to screen with fundamental filter, not just technical. Check the earning date, and the earning date must be 30 plus days away. Also, you need to check IV. It should be between 30 to 70%, not extreme like over 100%. The quality eyeball test. Now you got to make sure that the company is making some money. Now, then later on you need to look at the chart analysis. So you got to make sure that the stock, whether the stock actually pull back healthy or not. Next one is the strike selection. Only now do I plan the trade. If the stock pass all 6 steps, I consider the trade. If nothing and my screen passes, I don't trade that week because cash is also a position. Here what I want you to take away from this video, cash secure put can absolutely generate consistent income for retirement, but only on the right stock at the right time. The FinViz screen for technical setup will get you started, but it's just the beginning. The real work is in the fundamental check, the earning calendar check, and the IV check. Most beginner, and I was one of them, see a fat premium and I click sell. That's how you end up assigned at $12 on a stock that opened at $9 in the next morning. The trade you don't take are sometimes worth more than the trade you do. Next Tuesday, I'm covering Call, another core income strategy that works especially well in this kind of market. So drop a comment. What's your process for waiting cash secure put candidates? I want to learn from how others do it. If you want honest, no hype option, education retiree, hit subscribe. Please note, all content is for educational purpose only. So I'm David. See you next Tuesday.